Hi everyone, hope you're all doing well, and today I'm going to talk about the stock that I bought on the first week of the trading year of 2022. It's been such a busy open to the stock market this year that I haven't really had time to talk about what stocks I've been buying. So yeah, I did buy a few more of the week just gone, but I'll update you guys in a little bit. But the stock that I bought on the first trading week, today I'm going to talk about it. It's the first time I bought this stock for around about nearly 2 years. So yeah, that was a bit of a surprise, and yeah, I just saw it as on a bit of a dip. Fantastic company, a great company with a great moat, a big market cap company, just a good anchor for a portfolio, and yeah, I took that opportunity to buy it, so I'll go through it all today. So if you do want to know when I'm buying companies or selling companies in real time rather than a week later or 2 weeks later, make sure you join the Patreon, link is in the description. I believe it is the highest YouTube subscriber to Patreon members on the YouTube scene right now, so that's something I'm massively proud of, and also kind of shows like the amount of time that I do try and put on into the Patreon. There's normally 2 exclusive videos a week on there, and also there's 600 members on the Discord to talk to as well. So yeah, a great little community there if you do want to join it. As well as that, if you do want to start investing, there's some links to some brokers in the description as well. Join through there on a few of them, like free trade, you get a free share as well. But we'll get onto the stock that I have started buying. The first time I started buying this stock for 2 years, and that stock is Disney. So yeah, I bought this on the first trading week of the year so far. Just saw it was on a bit of a dip, and I thought, you know what, I'm going to take this chance to buy it. It's a great company, great moat, and I think it's a fantastic company just to hold in the portfolio for the next 2 to 5 years, and probably more than likely even longer than them 5 years, because I can't see this one going anywhere anytime soon. And yeah, the last time I bought it was back in the CV dip. So I don't know if any of you guys were watching me back in 2019, shout out if you were, but in 2019 it started coming out that Disney Plus were working on a streaming platform, and I thought, oh, this is a game changer, it's kind of challenge with Netflix, and I thought, when you look at the content, and they have already, this is going to be very successful, and you add that in with the parks, I thought this is going to be great for Disney in the next 2 to 5 years. So I started picking up some shares. I was a bit worried about the valuation, but I thought it'll be okay. If it has a pullback, I'll start buying even more of them. And then wouldn't you know, half a year later, boom, falls off a cliff. So I start buying in the CV dip, and I've not really bought any since then. So yeah, about, crazy to say it, but about nearly 2 years ago now, which is absolutely bonkers to think about. But since the 12th of March 2021, when this stock hit 52 highs of, well, it was actually $203, but on Google it says here $197. Since it hit the 52 highs in the 12th of March, like a lot of stocks, not just Walt Disney, we've talked about a lot of them recently on the channel, just falling off a cliff. And it's not just growth stocks with no revenue. It is big market cap companies. Walt Disney is one of them. Since then, a company like this down 22%, and I thought, okay, time to pick up a few more shares, and if it carries on going a little bit lower, I will probably pick some more up in Disney. So Walt Disney has a massive amount of brands, a massive moat, and these are some of them that they've bought as well, which is absolutely amazing. You look at that, Marvel Studios for $4 billion, Star Wars for $4 billion, ESPN, Pixar, and you look at the characters that they have from them brands. If you were to take them all individually now, I think they'd be worth a lot more than what they paid for them a long time ago. So that is absolutely great, the amount of brands they have, recognized brands around the world. And the great thing about Disney, it has also great moat, great characters that will be around for so many years, recognized international. But the thing is that it's also quite a diverse income stream. The amount of different incomes they have really now is great. You look at the breakdown of 2019 here, and you look at the percentage of which comes from different areas is fantastic. And the big thing right now that Disney has is that you look at this big chunk here, parks and experience, 37% of the revenue. If I just go onto this slide here, you'll be able to see how hit that has been over the last period of time. From 2019, basically, the parks hasn't really had a proper kind of, year of operating since then. 2021 was not too bad, but 2022 could still be a little bit in and out, but should be more back to where it was. And you look at that, there's still, this is off 2020, but 2021 will be a little bit better than this, but that it's still like a 10 billion gap here that the parks still haven't recovered. But everything else in the company has been doing pretty good. Obviously the studio entertainment got a little bit hit as well, but that should see more of a rebound going forward. Now, even though the parks aren't fully back at operating and still have a lot more to contribute to the revenue, why is the share price doing pretty well? Why is the revenue still recovering quite well since the CV times? Well, obviously it's the Disney Plus. The Disney Plus platform has been absolutely amazing and has gained so much success. The characters they have obviously is something more than what Netflix could ever have. Netflix is trying to create their own original content, which is very tricky. With Disney, they can create original content, but also already have the fan bases in place, and that's what's been very successful. And as well as that, they launched at the perfect time. Everyone was kind of sat at home, nothing to do, launched Disney Plus, and everyone signed up to the platform for things to watch. So those two things have tied in really perfectly, and that's why I also like Disney as well, is that I believe the content is something, and the characters they own will be far more better than what Netflix will ever be able to achieve. And I do see one day Disney Plus overtaking Netflix as a number one streaming platform. And if you look at this chart here, you'll be able to see how quickly Disney is starting to catch up to Netflix. The amount of rate that they're growing at is so fast compared to Netflix. And like I said, I think if you give it a few more years, it'll just get closer and closer with all that. And that's because it has also original shows like this one, Mandalorian. I've watched this show. It's absolutely fantastic. I've not seen the Boba Fett one, so no spoilers in the comment section, please. But Mandalorian, I watched this TV show, and it's probably one of the best TV shows I've seen for a long time, especially the ending of the recent season. And this is something that Netflix will always struggle with. They won't have these fan bases in place that will come to watch these shows, and that's where they have that kind of, when you are put on the spot of, okay, you have Disney, you have Netflix, owns all these brands already. I think they just have that little more advantage of like, oh, but I really love that show. I mean, that's a new one, but I can't wait for these ones, these characters that I've been watching on TV for so many years. And I think that's what the little advantage that Disney has over Netflix going forward. And if you look at the financials from Disney, it's very good recovery now, and that's what we're saying. We haven't really got the full park recovery in these financials yet. So when you add in the full park recovery, Disney Plus still expanding, which is obviously going through a little bit of a slowdown phase because of the CV boom, that should all naturally sort itself out as well. We're going to have a lot of good growth going forward. And the big thing as well is, historically Disney has only grown very slow percentages. Now, the big thing that happens with Disney Plus is this company is now going to grow a lot faster than what it ever previously did. Disney was always a stock that only grew revenue at a small amount, profit only grew at a small amount. Now, with the ability of this new income stream, this is also going to be another game changer for what Disney has had previously for the company. So if you look at the current outlook for this year, you can see that analysts are currently expecting the company to grow 24% this year, and even in 23, this company is growing at 12% by analyst expectations. So we'll see what happens. I mean, for me personally, I've kind of got my numbers down as Disney to grow around high single figures. So if they do get into double-digit growth still going forward, I'd be really happy with that. I'd be impressed with that. But even though if it grows at high single digits, which I think it will do, then obviously that's still a lot faster than what it did previously. And when you have a company like Disney that is now growing a lot faster, normally when you have companies that grow faster or have higher growth, you trade at higher valuations. So I think one of the big things as well is that Disney might have what it didn't have previously, is it will also command a higher valuation now because it has great brands, a great moat, but also as well, it has a little bit more growth now as well, which I think is key. Just to say on the balance sheet, it's not too bad. Debt to equity around 50% on the actual cash to debt ratio. It's got 54 billion in debt and it's got 16 billion in cash, so a little bit heavy on the debt side. But when you've got so many things going on and so many buyouts, and the parks, they're not exactly cheap to run either and get operating and add things in, it's kind of what I would expect for something like a Walt Disney. So yeah, debt to equity wise, it's very healthy. The brands they have, they've got a fair amount of cash on there. So yeah, I'm not too worried on the balance sheet point of view. Even though it has a fair bit of debt on there, it's still, I think, in a very healthy position. And it's also worth saying that they own 5% in this amazing company you might not have heard of, which is called DraftKings. So just keep an eye out for this. I'm only joking. But getting on to not joking, they actually do own a 5% stake in DraftKings, but I'm only joking about that one today. But getting on to this one, the valuation point of view. So this is the big thing, is like when you look at the historic valuations, it's not too badly valued right now. That's the big thing. When you go onto the revenue point of view, total enterprise revenue, not too far out of historic averages. Same for the price to sales ratio, not too bad, maybe a little bit higher than normal, but same. It's not standing out as being incredibly too high. And if you look at some profit metrics, it's a little bit more higher on the profit metrics than what it has previously. But you've got to remember, obviously the parks aren't at full operation right now, so that will naturally balance out a little bit in the future, because that will obviously generate more profit than losses that it has been doing previously. And it's same on the normalized PE earnings, as you can see here. It's normally trading around the teen range, 16, 17, 15, 14s. And you can see here that it's at 37. Once again, though, we've got to remember the parks will come in. They'll generate a lot more profit as more and more people come in. So that PE has a lot of balancing out to do still. But when you start generating back decent amounts of profit, and then Disney Plus keeps growing in the right direction, this is the big thing is, if you look at Disney and you think it's going to go back to its old metrics at like a 14p ratio, then this company is probably looking still at a pretty heavy valuation. But if you feel like Disney will now trade at a little bit of a higher valuation or higher metrics as well, because of it has a lot more growth, and then you probably look at this one right now and you think, okay, this is actually a pretty good valuation. And that's my thoughts with Disney. I think this isn't the Disney from 2016, 2017. In my opinion now, Disney is more a totally different company from 5 years ago. And I think when you factor in the growth and the new income streams that it has coming in, I think this is a slightly different Disney to before, and we'll probably trade at a little bit of a higher valuation. And the growth that comes in, obviously the more growth in revenue, that will probably go to the bottom line, and obviously then you have more profit, everything drops in, all the metrics start dropping in value as well further down the line. So yeah, as a big blue chip company for the next kind of like 2 to 5 years, I think this is a great addition to a portfolio. Obviously Disney, the days of Disney, for example, I don't think Disney's going to be a stock that ever brings in like 40% return in 1 year. I don't think that will ever happen with this investment, don't get me wrong. But when it comes to a bit of a safe investment, a bit of an anchor in a portfolio, one that just slightly ticks nicely in the background, one that you look back in like 5 years time, I think Disney probably be. I'll probably double my money on Disney in 5 years time. So yeah, it's just one of those that I think is, especially when you get the bumpy times, which obviously, with like a growth stocks, for example, it's one of those stocks that are a really nice stock just to hold your portfolio down as well. A bit of a diverse portfolio as well. So yeah, I just think it's a really good one for just to basically just lock away for a long period of time, as what I've previously done. I've owned this stock for nearly 3 years now. So yeah, I think it's one that I'll just keep nibbling if I ever see a dip on it, and that's what I did. So hope you enjoyed this little update on Walt Disney, and yeah, if you could hit the like button, that'd be absolutely amazing. If you're new, subscribe, and I'll see you next video.